Hello bro, welcome back. So, so this was a chart we have seen on the previous video episode, right? So I have talked about the importance of placing your stop loss just below a little bit, one tick, even if it is one tick below the grid. You can use the grid for your stop loss placement. Okay, you can use the grid as you can see. Let me refresh it for you. This one was the low, right? For this black box, these three are the ones we are focusing on. So this is a grid, right? So the lowest low traded a little bit below the grid, right? So our stop loss should be one grid below, right? So because we are buying, it is one grid below, then a little bit space. Why? Because look at that, it traded a little bit, right? So you gotta put it a little bit down. Okay, so this is how you prevent the second model. Okay, this is practical. The second model, look, support and boom. Okay, support and boom, right? Simple as that. Simple as. And then now in this video we'll be talking about this pump riser. It is exciting. It is exciting. So, do you see any black boxes? Yes. Where? Exactly riser 1, 2, and 3. Right. Even before that, we have a candle, and then a red candle, and then this candle, right? So that one can be our black box. But after the fourth one has been formed, these two are different. They are unique, right? So I'm gonna use these two, not the previous one. So what happened? The price did nothing. It did nothing. So I'm gonna wait. Then bam, bam, bam. Then finally this formed. Now again another black box here inside of this. Another black. 1, 2, bam. It did nothing again. And then this doji formed. This doji formed, right? Let us zoom in. This doji formed 1, 2, and then bam. The third one did nothing. But the fourth and the fifth one, they broke. They really broke it. So that's a buy. Okay, that is a buy, right? Then place your stop loss down there, below the grid. Okay, sorry, below the grid. So that's a buy up there at the grid, below the grid. Your stop loss, that's a buy. Then you are targeting using the wicks, not the body. Using the third candle's body and the previous two candles low. Okay, lowest low. Which is the lowest low? This one, the first candle, because the second candle is big. We don't want to use that. We want to use the second highest, the second lowest low. Okay, so that's low. That is the low right here. We are interested in the first candle's low. Okay, that's how we measure the body. And then bam, TP1, TP2 is up there most likely. So TP2 after TP2, look what the price did. That's your 30% off. Then on its way, don't touch anything. On its way, it made another black box. 1, 2, 3. Did it break? Did it break? Yes. Yes. This grid that you are seeing here there is a lot of pips between it. Since this chart is not zoomed in. It is not zoomed in. Okay. I didn't zoom in like this. Okay. So we cannot use this grid. We use this grid when we are trading the classical black box, okay, which assumes that this whole thing is a black box, this whole thing, and then we see the grid, and then still we didn't break us here. But using the recent black box, the unique two candles black box, we bought down there and we made profit, right? But using the classical black box, since look at that high rise protruding up, that week, and look at one grid up, and then look at that week, it never broke it. It made equal highs. This one and this one, the retraced back. No buy, no buy. So we are buying only up there. So there is a difference between them. So if you are trading, so when you are using the classical black box, you can use a zoomed out chart. But if you are using the two candles black box, you have to zoom in, not too much, but zoom in and use the grid, the zoomed in grid. The grid between the zoomed in and the zoomed out are different. This grid holds a lot of pips. It might be 20 pips. When you zoom in and measure the grids, the space between the grids, it can be 5 pips or something less. Okay, so there is a difference there. So then what happened here? It broke. Okay, the 5% is broke. It is broke. That's a sale, right? At the tip, that's a sale. Stop loss up sale. Okay, then what you're gonna do is, as you can see, we are already in a buy with this one, stop loss down there. We are already in a sell with this one, stop loss up there. This is a risk. This is a risk. Potential profit is down there, right? At least 1 to 1, then 1 to 2, right? Then what happened? Price almost immediately reversed, changed direction, and hit our stop loss up there. What is the time now? The time is buy. It is a buying time. It is a buying time. When you zoom out, you can see the risk is not too much. Look, that is a buy. That's your stop loss. Look at the risk. Potential profit is up there. Okay, that's your risk. There's a potential profit already in a buy down there. So this price moving up is just reinforcing the idea that the price is moving up. And we are just supporting this black box here just to move up, right? So that's what's happening here, okay? Then what happened? Price pumped. It pumped. It is crazy. I've never seen these kinds of things. I mean, you do not expect these kinds of things. I have seen these kinds of pumps, but you do not expect it more often, right? So it pumped, it went more than TP2 and TP3, right? And then finally found it is high, right? Where is it high? It is high is found up there, right? There up there, another black box formed, and that black box is the black box that I told you in my previous episode, right? That one. A buy, I told you, and stop loss down there. That's the one that I told you. Okay. So the market still pumped down. Okay. So, like I told you, that is the end. I mean, that's not the end. That's another black box up there, and that is our buy and our stop loss down there, right? That is what we have discussed in the previous video and on the start of this video. So it pumped up. So you can trade your stop halfway, then halfway, then halfway, and then wait for the pump and halfway. Okay, you can do that. Okay, you can milk it. So this is just an amazing pump prices. I don't know, it could be 100 pips more. Okay, 100 pips more. So next, what do we have? We have this pump. I mean this chart rising. So this chart almost immediately goes down there. That black box rising. That is a buy up there. Stop loss down there. Potential profit is 1 to 2. I mean it's not 1 to 2, but it's almost 1.5, 1 to 1.55. So what happened here? So first, this broke up there. The 2.5% is gone up there. That's a buy. Then the market pushed up and pushed further up. Then we measure this TP1. Then TP2 is most likely hit, which means this black box is gone. This is gone. This is gone. So at TP2 you take your 30% off, and based on this 2 candles you can take 30% off at TP2 riser 2. Then TP3 another 30%. Then these 3 candles TP2 is up there, you take 30% off up there too. Okay, and then leaving the rest to trade. What happened next? We made another black box, which is this 1, 2, and 3. But we're never trading this one. Why? Look, stop loss and entry down there. Look at the risk. Not gonna happen. So I'm gonna wait for the next black box, smaller one. But I can use this for TP projection. So since it broke the downside, I'm gonna project the downside. Bam, TP2. So I'm assuming this price to go down there. Then what happened? Another black box. 1, 2, 3, 4. And in this another cluster. Did it do anything? Did it break anything? Okay. As I look, it looks like it didn't break. It didn't break. So it didn't break any. I mean, it got too close. It got too close. You can zoom in on your chart and see if it did broke the upside. Then it came back, supported, and moved. So look, notice that it never got close to your stop loss. So it's beautiful. It's beautiful. So since it didn't break, then I'm gonna wait for the next one, right? For the next one. Then what happened? This 1, 2, 3. Did it break? No. 1, then 2. Right? So there is no black box here. What I'm gonna do here is I'm gonna use this. Then I'm gonna buy up there. Okay? I'll be buying up there. My stop loss down there. That's my risk. Potential profit up there. Okay? You can use the Fibonacci. And here are previous black boxes that the price didn't hit TP2 riser, TP3. So I can use that for target 2. Because this is a buy. On the upside. And then look, the price pumped. Look exactly where the price retraced. You measure this one. This one. The 3 candles are the most important one. TP1, TP2 is upside most likely. So this one and this one are almost equal. So TP 30% off, elate the other. Stop loss still down there. Then the price pumped up, so and went to the picture up there, so you take another partials off. Notice that the price supported before hitting TP3. Most of the time it does this kind of things, which means we cannot trail our stop. Sorry for that noise, guys. So you cannot trail your stop until TP3 is hit. I have a reason when I tell you that. So you change of scenery. So this chicken is it is messing me up, bro. Well, anyways, so there is a reason that we do not trail our stop loss to break even if TP3 is not hit. Until TP3 is hit, the stop loss is gonna be down there. We will not move it. So TP3 nailed up there, and then our stop loss is gonna be up there. So the price just pumped. I never looked back. Do you see? What the price is doing? So there is a reason that our stop loss is down there after TP3 has been hit. So it pumped. So after that TP4. After TP4 you can put it at TP2 for stop loss. This is another black box, but we will not enter it. Why? It is because our stop loss up there, but at first we could have sold this one, but look at the risk. The risk is crazy. We can use this for TP2 projection up there. Okay, but not to enter. Especially not the third model. This is the third model that you are seeing. This is the first model actually. The first model as you can see is both. But in the two candles, principle in the two candles black box, we traded down, then we traded up. What is that? That's the third model in the two candles, in the lower time frame. But since we are on 1 hour time frame, it is still the first model, because technically this is a black box. We don't care if it comes down there, the third candle. Only the fourth candle determines the model and the direction. Okay, for the classical black box, or for the 3 candles black box. But for the 2 candles black box, the price can trade down. Look at that. Then trade up, making the third model. Then after that, trade down again, making the fourth model. Then after that, it can trade up again. But it is very rare. These kinds of things don't happen that often, so you don't have to worry about nothing. Okay, I'm trying to tell you everything about this. Okay, since you have to know, there's nothing I can do hiding any of the principles or the theories that I found in this thing. So this is the whole business right here. So this is the whole business right here. So our trade down here, which was 30% of up there, is still running, pumping up as a cup and handle. Oh my goodness, it's embarrassing, bro. I mean, some of them work, but these candles patterns, they are not good. I can't tell you that. So next what happened? This is the next chart. Almost 20 minutes, so let's pump it. So it's the same thing over and over again, so we don't have to kill our time about nothing. So it's best to study the charts yourself. I have already showed you the core content, the core principles, the core theory. So now it's time for you to explore on your own. I can't be there when you are trading. So yeah, after showing you the way and how to, after giving you the weapons and the depends everything. it, it is your job now to go forward. Okay, so from now on I have to move up, fast. I can't be repeating put your stop loss at break even after TP3 is hit. No, I'm not gonna do that. You have to know yourself. You have to do it yourself. I've already talked about this from the first episode. I only talk, tell you something when if I didn't communicate it early. Okay, there's no point in repeating. Okay, it just wastes time. So, do you see any black box? Yes, 1, 2, 3. Let me zoom in. What is that? That's a black box. 3 of them. These 3 are a black box. What does that mean? How? It means you measure the 2 candles body, and then I'm repeating this stuff. I already talked about this, but this is the last time. Okay, so you measure the 2 candles body, and then by what? By a Fibonacci, bro. Your Fibonacci should have the 1%, means 100%, and the 0%, or the first, the lower line is upper line, the boundaries, and then at the middle the 50%. You should have this, and then the 23.6% and the 78.6%. Those 2 levels are very important to determine if that consolidation is a black box. Okay. After some time, your eyes will be trained, and you will remember it in a snap. You will decide in a snap when you see black boxes. Okay. Oh my God! It really hits at 78.6% right there. I snapped like crazy, right? So I didn't see this chart before. I might have seen it when I screenshot it, but I haven't afterwards. So when I looked at there, I knew that 78.6% was hit, because look at the bodies and look the wick. The bodies are small, and the wick, look, the market looked back to fulfill its purpose. Okay, it has to hit 78.6%, otherwise it cannot move up. It can move up, but it's not our setup. We will abandon it. Okay, so it did that. It moved up. That is a black box. You mark it, and then the next candle moved down, and then pumped up. Now it is time to buy. This is a zoomed out chart. So to know if 2.5% is broken or not, you have to zoom in on your chart, not here. Zoom in, not too much, but zoom in, and then you will see that right there, this high and this third candle's high has been broken up there. Okay, actually it is this candle right there. This candle, the doji, the spinning top right there. Okay, because it adds to the third candle, and then actually it adds to the third candle already started the breaking, and then the fourth candle followed it, and then the fifth candle pushed it more. So you can interrupt there and stop loss down there based on your zoomed in grid. 2.5%. You can calculate that 2.5% using the price level of what the market is trading at. Okay, I'll show you that in some other video, but it is time consuming, so you don't have to you don't want to do that. Okay, after some time you will get used to it. You'll identify if it breaks or not, if it is a really break or not. Okay, it's really simple. So after that, that's a buy, that's and determine the bodies. Since they are doji, you can use equal loss and then upset the high of the body of the certificate. TP1, TP2, 30% of TP3, 30%. What is it? 60% is gone now, it is off. Okay, then your stop loss at break even, simple as that. Okay, and then the market formed another black box in which it does always, and then nothing happened until that candle rises. That candle broke, that's a sale. You determine your TP, TP1, TP2, TP3. Most likely that's TP3. Then you take 30% off, 30% off, 60% off, TP stop loss up there, stop loss which was up there, now it is at break even, at your entry. So the market came back 60% off, you don't care. And then another black box for this, the third one right here. Sell, buy. Okay, so delivered, that's why it didn't respect this law. It is already hit target delivered, so we don't expect the price to support here and give us another pump. No, that's not gonna happen, bro. Target achieved. Target achieved. So now they are gonna turn their back and attack the sell side or the lower prices, because there could be some huge black box up there that TP2 was not hit, so that is loading, still loading. So that's why they are pumping it down to hit it again, because the buy or the buy program now already delivered. So now it's time for the sell program to execute. So now we are in a sell program. Okay. Then this format, black box, we never enter this one. Stop loss down there and enter up there. We don't do it. Look at the risk versus this one and our entry down there. Look, that's the risk and this is a risk. They are not equal. So there is a huge difference. You cannot enter these kinds of trades. These are used for TP2 project, just like I did here. Look, exactly at TP2, what happened? A pullback. It is a pullback. That's why we take partials. You can take 50% if you want. If you are like shaky, like whoa, oh my god, what if it reverses on me? What if it eats my profit? What if it hits my stop loss? If you are shaky, you can take half of your money, half of your entry, your order. So it is based on you. It's based on you. Okay. Yeah, it all depends on you, but I recommend 30% because there are TP3 and more continuous. Then what happened there? So I am waiting for the price to hit this high, because it was already shown me it signed down there. It never broke the 5% up there. It broke the 2 candles 5%, but I am interested in the 3 candles 5%, this one. It never did. But it did broke the 3 candles 5% down there, which shows me that we are dumping. So I'm gonna project my TP to the downside, TP2, right? TP2, right? So that's exactly where it went. But unfortunately there was no setup. You can go to the lower time frames, targeting this one. After getting this, you can go to the lower time frame, enter a sale. But I don't recommend it, okay? I don't recommend it. Stick to your where you are trading. If you are trading the 15 minutes, it's okay. It's okay. If you are trading the 5 minutes, it's okay. It's good. It delivers fast, but there could be some choppy price action before the price moves in the real direction, but it's okay. What about the 1 minute? It is too fast. It is too choppy. It's very, very choppy, bro. It is choppy. Okay. It's, it's not worth it. I mean, you can try. You can try, but you can 1 minute on Nasdaq and NQ and the indices, the gold and silver. It is convenient. It's good. It's not that bad. But on the forex like euro dollar, pound dollar, special dollar shape is it's not gonna work, bro. And the cryptos on 1 minute is not gonna work, bro. Cryptos like Bitcoin and Ethereum USD and what is this? Yeah. Solana or something, Solana USD or something. It's not gonna work on 1 minute because they are choppy. They jump space. There is a lot of space between them. You're gonna mess your head, bro. It is there, but you'll mess your head. It is not as clear as like this. So what happened here? What happened here? Typical mode. Now this thing is done. I'm gonna wait for another one. Bam, we got it. What happened? Nothing. It didn't break nothing. It went to inside this range. It did nothing. So I am now sniping. Sniper. What does that mean? It means I am picking for a new black box. Okay, which forms afterwards of this. Right, so 1, 2, 3, 4. Stop loss up there, entry down there. Why it broke? It broke. That's a sale. That is a freaking sale, bro. It's a freaking sale. Beautiful. I'm dump. So as you can see, that's 30%, another 30%. Now it is time to trade your stop loss to your entry up there. Right? It's a principle. It never changes. Then the price dumped now to TP2. The price dumped more at TP3. The price gone down after TP3. It is time to trade it close because the price cannot just go in straight lines, baby. After TP3, bro, it is exhausted. It is time to fill the imbalances. It is time to explore the buy sides now because we sold a lot. It's time to explore the higher prices. It left a lot of inefficiencies here. If you go to the 4-hour time frame, you would see this as 2 candles and then the third one broke like this. So this thing has to be balanced a little bit. And then afterwards trade up there, filling this whole gap. Okay. And this is the TP for the 4-hour time frame block, this one. But on the 1 hour, we are snipers. We are entering up there, baby, not down there. A huge difference. It's beautiful trade right there. Then what happened? Okay, almost 30 minutes. I mean, that was 30 minutes. Then what happened here? Another black was that I showed you earlier. That is right here. Just like I told you, the price marched up, bro. Look. That's why we trail after TP3. You trail halfway to closing in fast. Okay, not too close, but better than this. And this gap, that's halfway right there. Halfway, following the price. Okay, so that way you are mitigating risk. You are getting a lot of profit. Okay, versus getting out here and getting out down there. There is a huge difference because you won't get these kinds of moves every day. It's not gonna happen. So it is best to milk it good. So this is a pump that I showed you. A buy, stop loss down there, pump to TP3. Now stop loss at break even now, so the market came back and got out of the trade. And then here you remember that we didn't get a setup. This one, this is the trade. Yeah, exactly this one. This is the one that I showed you earlier. So this is it. So nothing to repeat here. Then this is another setup here, another chart. I'm sorry. So it's the same thing here. The same thing here. Black. I mean candle. Then that's a black box. Did it break? No. So we wait for any black. 1, 2, 3. Did it break? No. We wait for the new one. 1, 2. Now you zoom in. So this is exactly that I showed you earlier. This is the same thing as I showed you earlier. Just a buy up there. I already told you about this one, so that's a buy. Okay, I already talked about this one. So this one. Which one was it? Yep. Yeah. It's exactly. It's this one, I think. Was it this one? Which one was it, bro? Which one was it? Ah, my goodness, where did it go, bro? Yeah, there we go. Right there. Forgot about this. I forgot about it, bro. So that's exactly what happened here. What you are seeing here is the start of this pump. So exactly they came here. Exactly. Boom. They hit half of it. And look. Huge pump. I would have been interested to enter it by riser and put my stop loss down there to target up there if TP2 was not it for this black box. TP1 and TP2 was nailed unfortunately up there, so I'm not interested anymore. Okay, I'm not interested anymore. So look at this one. That's the one that I didn't see. Look, when you zoom in, look. These three candles are similar, but the first candle is not. It is a full body, this one is a doji. So I'm gonna consider this. And when I'm determining my TP, it's gonna be up there to down there. Bam, TP2, TP3, look. It's nice. It is nice. So this is another chart over here. Another chart, but since the time is running out, I'm gonna have to I'm also standing, as you can see, so I'm getting tired. So I'm gonna have to move the rest of the episode to the next video. Okay, I'll see you in the next one. Okay, thank you for watching.